All right. Good morning, good evening, greetings to everyone for where you might be around the world. I wanted to make a quick, sort of an intra-week update, but not really because it's still the ending of Monday. But the markets has closed for Monday, and we've got in Monday's price action. So I'd like to give a quick update on that and my top watch for the week ahead. So going to the dollar index from the daily time frame, we can see the price did trade down on Monday yesterday, and now has actually finally touched the daily order block that we were highlighting in the week ahead video. But I don't believe that the low of the week is set in yet. I'm actually waiting to see if price can trade all the way back down into this inversion fair value gap, even though I know it's a very deep retracement, but I would consider swinging the trade from here all the way back to the upside. The reason I'm considering this inversion gap is because of the lower time frame, because whenever I'm dealing with a high time frame PDRA, I would rather look for a lower time frame confirmation. In this case, yes, we haven't gotten a lower time frame confirmation yet, but it's a critical level that I can pay attention to. When we go down to the 1 hour chart, which is the time frame that's aligned perfectly with the daily, we can see that price is sort of selling off right now with this hourly fair value gap from yesterday. From yesterday being the previous day, being Monday's candle. So we've been selling off from this fair value gap on the hourly chart. And right now, if you were to ask me where the nearest drawn liquidity is, I would say that it's probably this swing low right there, from internal range liquidity all the way to external liquidity. And I was looking at what PDRA could I possibly use after this liquidity has been swept for me to try and buy the dollar. And the only PDRA that my eyes was paying attention to is this high probability order block right here. So we have a high probability order block that has a fair value gap with it. This makes this a very clear area of interest. This fair value gap here with the order block right there in the middle that took liquidity, by the way, took liquidity, displacement, market structure shift. This area for me is very sensitive. So if we can sweep this liquidity and tap into this discounted area, I would definitely consider buying the dollar, with an invalidation being below this order block. So I wouldn't like to see price actually trade below, not even close below, actually trade below this order block. So this would be my possible area that I'll be hunting for buys. Of course, I cannot trade the dollar index as it is directly, but I would consider taking it with the opposing currency pairs, like selling euro dollar or pound dollar, or buying USDJPY. So this is what I'm looking for on the dollar. Of course, we'll see how the week develops. We could actually just turn around from here and that's all we need, but I'm looking for this or nothing. So if we trade here, I'll take it. If we don't, then I won't bother with the dollar this week, even though it's my main focus for the week. But this area is very sensitive to me, and that's why I was mentioning this area, because I mean, notice how it's literally in the purple area, which you know on the daily time frame is the inversion fair value gap. So that's why I'm waiting for that deeper retracement down into this area to buy the dollar from. Anyway, going now to my focus for the week ahead. Actually, this trade was covered on stream yesterday during the London session. So if you like day trading gold, don't forget to tune in there. And while we're here, don't forget to tickle the like button below. Just tickle it, gently tap on the like button there, and the subscribe button as well, since you're there already. Anyway, so yeah, if you are interested in intraday London session trades on gold, just tune in. I will be here most of the time. Not every single day, I can promise that, but I'll be here most of the time. So going to my main focus of the week, it would be from EURJPY. As you know, my model is very simple. I focus on the monthly, weekly, or daily internal to external range liquidity. So starting off with the monthly chart, we can clearly see that we don't really have any internal to external. We don't have any fair value gap to take it to the swing high, for example, in this case, or any fair value gap to take it to a swing low in this example. But on the weekly chart, we can see that we actually have one. Similar to the previous trade idea that I covered on the channel, which is AJ, we have EJ now in this case, right? So that's the first rule. Find a high time frame PD array that you can take from internal to external range liquidity, and in this case we have one. We have EJ from internal range liquidity, which is the fair value gap, to external range liquidity, which is the swing high. Now the next thing we look for is an SMT inside of this high time frame PD array. Of course, because we're dealing with EURJPY, I would give you a second to let me know what the pair that's being used as an SMT divergence to compare the strength of EURJPY. And I'm hoping you all say GBP/JPY, because Euro is the closest in strength when compared to GBP. So we are supposed to now compare to GBP/JPY. Let's see what GBP/JPY looks like on the same time frame. So this is the weekly time frame. This fair value gap is from the 13th of May, as you can see down there. You can see the date, 13th of May fair value gap, and this is the same fair value gap over here on the 13th of May. The next thing we are looking for is an SMT inside of this fair value gap, and I can already see one here where on EURJPY we had this low from the 3rd of June and this low from the 10th of June. We can see that the 3rd of June was swept, so we took the previous weekly low on EURJPY, while GBP/JPY failed to do the same. So we have this SMT divergence. That's the next thing that we have on our checklist. If we have internal to external on the weekly, daily, or monthly, which we do, next thing is an SMT inside of that PD array, which we do have an SMT. The last thing we now look for is time frame alignment to find our entry. In this case, because we are dealing with a weekly PD array, our time frame to align with this perfectly will be on the 4-hour. So on the 4-hour chart, let's actually draw the SMT properly. It should look something like this. Yeah. On the 4-hour time frame, we simply look for the market structure shift entry or order block entry, then a continuation to the upside. So looking at this last down close candle, the one that took liquidity, immediately a candle closed above it, it became our change in the state of delivery. It became our confirmation that price is likely going to be bullish. So I drew out the body of this, and right there, right in the next candle, well, the third one, we closed above this down close candle. This became an order block to me. So when price came and retested it, I would be hunting entries from there. So I would have been in on this trade here. But if you missed it, that's fine, because, well, this is a bit more advanced and has nothing to do with the model that I trade. But if you look here, we do have a rejection block. Cancel. We have a rejection block down here. On a lower time frame, this rejection block is on a 1-hour chart. This rejection block is also a 1-hour order block right there. So we have an hourly order block, but we're not going to go into that right now. Going back to what we're talking about, time frame alignment, we have candles closing above the previous ones, and finally we have a candle here closing above a swing high. This is the confirmation I need for my entry for the model that I trade, right? So that's our market structure shift. That's when we can properly validate that structure has shifted to the upside in this example. The next thing we need for an entry is a fair value gap, and we got exactly that right here. We have a fair value gap. So right now I would be buying EURJPY. My stop loss goes to the previous swing low, which is this one right there. That's the last swing low that we have on our chart. Then of course my take profit level would be at that external range liquidity from the weekly time frame. So this would be my setup on EURJPY. So yeah, I just wanted to cover my outlook for the week, my main focus for the week, and a quick update on DXY. While we're here on the dollar, I will be live streaming GU tomorrow during CPI, but we just created a daily fair value gap after sweeping the 20 days high and having a structure shift to the downside. So this to me is looking a lot like the typical 2022 model, a lot like it, and I feel this is more of an intuition based on data and experience, but I feel that we might run higher tomorrow before CPI into this, deeper into this fair value gap, potentially into a lower time frame order block. I think we have one on an hourly chart, potentially into this area, into this area. These flat body candles, we could possibly trade higher into that area, then CPI would drop. That's my prediction for CPI, at least for now. We still have to wait to see how this daily candle closes, but I'm expecting price to trade deeper into this fair value gap and then fall off so quick that the 20 days low might be taken this week. That's my expectations for GBPUSD. But yeah, we'll see by then, and I'll be live for CPI tomorrow. For now, that's all I have. Stay safe, good luck, and good trading.